Welcome to our YouTube channel. My name is Osifo Samson. Today we shall be looking at market efficiency or business efficiency. Now, if an investor is coming in to come and invest into a company, an investor will always look at the financial record of a company, how viable the company is before he invests into it. But the problem is this: you need to understand something here. Market efficiency the topic is a recourse concept of finance. Market efficiency. How do you identify or how do you advise clients that such business that other individual is going into is viable? Apart from the investment analysis we have looked at before, how do you advise clients that if you put money in this business or in this stock, the business is viable? We need to look at what we call information. Information is a vital factor for people and also a corporate organization. Information brings people down as well as an organization, and also what we call it, bring people up. The level of information you have will determine the kind of investment you want to do with that company. Now, what kind of information that you require from a company for you to know that the company is really viable, that you can invest? That is what market efficiency is talking about. So, if you don't have enough information about a company, don't invest in such company. For instance now, my name is Osifo Samson. If you don't know me too well, why will you invest money with me? You don't know me too well. So there are information you need for you to invest into a company. So once you don't know a company too well, don't invest into what you cannot control. Because at the end of the day, you are not looking at what we call the efficiency of that organization or of that market. Now, let's probably now look at stock as a product now. Now, you want to invest into stock. The first thing you need to look at is this: the information that is available on the stock. If the information is not primarily available, why will you invest into stock? Don't let people push you. Understand the index of what I'm trying to say. There are three factors that you need to understand here, that you need to look at. The first thing is what we refer to as the weak, to as the semi-weak, then to as the strong. Now, an investor needs to note these three information. If you don't note these three information, it becomes a barrier to you. How do you identify that a stock is weak or a business is weak? It's very simple. Now, as I said before, most of the topic or most of the courses we are taking here are just a summary of those courses and not the real full of the courses. That is why I'm breaking it down, because in market efficiency is extensively more than this. But we are just breaking it down to understand the concept of the courses. Now, you can identify a business through these means if you want to invest. That's the bottom line. Weak, semi-weak, and strong. How? Through information. How do you know? How do you identify that a business is weak? This business will be talking about what we call history, historical. We're talking about historical information. It also happened to individual. Yesterday you are rich. Today you are nobody. So that it shows that that person is what? Is weak. The same thing to apply to organization. When an organization is weak, it's only going to give you what? Historical information. Means it won't give you the present information now. It's only going to be giving you what has happened before. So If you're asking him to bring a financial report of 2020, you'll be giving you a financial report of 2018-17. Where are 20's financial reports? Where are 2018 financial reports? So it shows that the company is weak. So such companies should not be invested into. The same thing applies to stock. If they are giving you historical information, it shows that such businesses or such stock don't invest in it. Now, when they are semi-weak, they are only giving you what we call public information. So what is publicly available? That's what they are giving you. What is publicly available? So what is publicly available in the market? That's what they are giving you. We have this. They are not giving you the in-depth analysis of their financial reports as well, but they are only giving you what they prepare to the public. Now, for instance, if you open a National Daily, you only see a financial audited report of a company. Now, if you rely on that audited report alone for a transaction you want to do with a company, means you are only relying on what we call semi-weak information, and that is not going to give you the efficiency of the market. You're only going to limit your information about the market, and by limiting your information about the market, it's also going to bring a barrier to your decision. So your money can be lost. That's what it means. So public information or publicly information, it shows that what is semi-weak. Historical information, it shows that the information is what? Is weak. It shows that the company is weak. Now, how do you identify a company that is what? Strong. The company will give what we call private and public information. So what you don't even need to know, they will tell you. What you don't even need to know. Because some people will say private is private now. So must you know my private life? But because you want to invest in such company, you need to know the private life. Imagine you want to marry a woman and it's saying that you should not know your private life. How do you know the woman then? Because you need to know her private life. You need to know her mom. You need to know her dad. You need to know what you have gone through in life. So that you can definitely understand the person in total. That is the same thing applied to business. So your understanding must go to this. That is why I said in this analysis, we are only going to look at your understanding to all these issues. So if information is not given to you privately and publicly, it's not a strong information. Means it's not a strong market efficiency. So don't go into such company. That's what it means. Don't go into such stock. Don't go into such business. What you need to look at is what? Is private and public information on any stock, on any business. Now, you understand now that if you want to go into any business now, without you meeting a consultant with this understanding I've given you, you can definitely know that, sorry, this is not enough for me to invest my money. I need all information about your private information and about the public information that you have put there, so that I can understand the kind of business I want to do with you. Now, in this regard, this is what most consultants also use as well to tell or to advise clients on businesses and partnership that they want to do with people. So, however, I've said that before, that this platform cannot really manage all the concept of these courses. But what we are trying to do is that we are trying to limit and bring out the understanding of all these few courses in our YouTube. So thank you for watching, and God bless.